SPX is rallying as well, because the current risk on market you've got is taking you far beyond this high. Now, like I was saying a minute ago, for those on this stream, absolutely, this could happen. That could happen. But this could also happen. And I would say the fall is more favourable than the rise. And the reason why is because you've come up 1,000 points already. It's already gone an awfully long way. And the longer it goes up, the more time you're extending until a fall. You're giving it more chance. There is more and more chance for sellers to pile in, because eventually at some point, institutional investors, whomever it is, they are going to want to take their money, because if they don't close a profit, then they never make any money at all. So when, and ultimately when, you get negative market sentiment come in, probably from the Federal Reserve first, you'll see a change in direction, and it will come back to key MAs. And my target, therefore, for long-term swing shorts remains lower, about 4,800. Now, how long that will take is completely up for debate. Whether it will go higher or not, again, completely up for debate. But like I said, the only fact that remains within all of that speculation is that that is a high price. And your job as a trader, as many of you know, is to buy low and sell high. Okay? So just like Bitcoin and just like gold, which I'll cover in a sec, it's not the time to buy up here. Okay? If you wanted to buy it, you should have done it much lower. You should have done it nearer to, at this point, it would have been all the way down there if you wanted swing longs. And I did call that long. If you look at the date on my profile, I called that long. Now, once you get to these key highs, you shouldn't be buying. You should be changing your buys to short. Yes, it has gone higher, but my thinking was the same now as it was back then. That simply, there was every chance that it could have got higher, every single chance. And I'd planned for it. So now, 300 points on, my bias is still short, because my early planning is preventing a 300-point move being the be-all and end-all of my trading account. And it's the same as if you get to 5.2, 5.3. Okay, it's all about risk management. But you should never pretend, in either case, that your bias is absolutely definitively correct, and there's no way you can be wrong. In other words, if you're saying that it either can or can't go higher like that, okay, or it can or can't go lower like that, you're kidding yourself in some way. All that matters to people like me, who actually make money trading, throughout the month, is the price now. Okay, the price now every single time I'm looking at it. Okay, because that's all I can know, and I would rather be short at a high price than long, essentially, even despite the current momentum. Because, like I said, the only reason why your SPX is coming up is because there's a risk-on attitude to the market. Now, for those of you who don't understand, these kind of terms, risk-on is where people are okay taking risk. That's why you've got Bitcoin coming up. That's why you've got all indexes coming up, because they believe the easing of inflation is going to open the gateway to growth for the global economy, particularly the US, and that's what's going to cause your boom in price. So largely, even if that was to happen, it's priced in already, because people have already assumed that the market is going to do that. But the absolute clearest thing you can possibly see with this is absolutely the fact that, you can count them with me. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles green with one red in the middle. And then you've got 1, 2, 3, 4, 5, 6, 7, 8, 9. You've basically gone up 18 days, more or less, straight up. Okay, if you zoom out, you had something similar 13th March all the way through here. Sorry, not 18 days, 18 weeks. 18 weeks. Okay. Even on this rally after COVID, remember you had an enormous drop, so it was fairly justified. You had extreme positive market sentiment with everything reopening. That's what caused this. Now you're getting something relatively similar now, because you're getting this extreme bullishness with the idea, similarly like you had before, that the global economy is going to explode and everything's going to be fantastic. Okay, now even like I said, even if that is the case, you've already gone up 1,000 points. You've already got it priced in. Okay, you're just pending a change in the market. And when that change in the market comes, you get something like this, these long-term falls, which absolutely crush everything, okay? The market has to revert again at some point, and absolutely, if it looks like this, if any chart looks like this, I am never buying up here. No way. It's just too damn high, all right? And you've got your stock oscillator way up as well telling you that. It's completely overbought. My short bias remains. It's been like that for weeks. It will remain like that. I'm only ever going to buy if I get a considerable fall and I can hedge. That's all we teach people to do. For consistent long-term gains and capital protection accordingly. So that is your SPX.